Bitcoin. Some people call it the future of money. Some people call it a Ponzi scheme. Some people become millionaires from it. Some people lose everything from it. And most of us don't even know what it even is. So today, we're not doing Bitcoin to a million. We're not doing crypto is dead. We're just answering one simple question. What is Bitcoin? Bitcoin is digital money, but not digital money like your bank account. Your bank account is just numbers stored in a private database controlled by a bank. Bitcoin is different. Instead of one bank controlling the database, thousands of computers around the world maintain it together. This shared record is called the blockchain. Think of it like a big ass public ledger. Every transaction is recorded, anyone can see it, but no one can secretly change it. If you send Bitcoin to someone, the network verifies it confirms you own it, records it permanently. No middleman required. Now you might be asking, who made Bitcoin? Well, in 2008, it was introduced by someone using the name Satoshi Nakamoto. And to be honest, we don't even know who that is. The timing wasn't random. 2008 was the global financial crisis. Banks collapsed, governments bailed them out, and the trust in the financial institutions dropped. Bitcoin's core idea was simple. What if the money didn't require trust in banks? What if the rules were written in code instead of being controlled by people? Bitcoin is unique. There are thousands of cryptocurrencies, but Bitcoin has 3 characteristics that define it. Only 21 million Bitcoin will ever exist. That number is coded in. Roughly every 4 years, the reward for mining is cut in half. This is called the halving. Over time, new supply slows down. Eventually, it stops. Compare that to traditional currencies. Governments can increase supply whenever they choose. Sometimes responsibly, sometimes not. Bitcoin cannot be printed beyond its limit. That's either a strength or a constraint, depending on your own economic philosophy. The second characteristic is there's no headquarters. No CEO, no board of directors. The software is open source. Anyone can review the code. Anyone can run a node. No single entity controls the system. But decentralization also means no one is responsible if something goes wrong. That's the trade-off. Now, the third characteristic is to use Bitcoin, you don't need a credit score, a bank account, government approval. You just need internet access. In developed countries, this sounds minor. In countries with unstable currencies or strict capital controls, it can be really significant. Now, the bull case for Bitcoin is it's a hedge against inflation, a store of value like digital gold, a protection against currency debasement, a system immune to political manipulation. They point out governments historically increase money supply over time, inflation reduces purchasing power, Bitcoin's fixed supply prevents that. They also argue as more people adopt it, its network effect strengthens. More holders, more infrastructure, more legitimacy. Now some really large institutions hold Bitcoin. Public companies, even some governments. That doesn't guarantee success, but it signals it's no longer fringe. Onto the bear case of Bitcoin, it's highly volatile. It's dropped 70 to 80% multiple times, produces no income, has no intrinsic cash flow, and relies entirely on future demand. Unlike stocks, it doesn't generate earnings. Unlike bonds, it doesn't pay interest. Its value depends on what the next buyer is willing to pay. Critics also raise concerns about regulatory crackdowns, the environmental impact, use in illicit transactions, and there's one more thing. If you lose your private keys, there's no recovery system. Billions of dollars worth of Bitcoin are estimated to be permanently lost. That's the full cost of ownership. Right now, Bitcoin behaves more like a speculative asset than everyday money. Few people price their goods in Bitcoin. Most holders treat it as a long-term bet, a macro hedge, or just like a high-risk allocation. For Bitcoin to function as global money, it would need more stability and mass adoption, as well as some government tolerance, and it would just need to be integrated into infrastructure better. That's not impossible, but it's not guaranteed either. To summarize, Bitcoin is a decentralized digital monetary system. It's got fixed supply, it's secured by math, independent of governments, priced by global demand. It's not guaranteed to replace money. It's not guaranteed to collapse. It's just one of the largest financial experiments in modern history. And it's still unfolding today. Thank you guys so much for watching.